Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of February 17th through February 21st. We're in part one of our weekly trading game plan. We'll try to help you learn how to make money trading tariffs. So we've got a lot to talk about, so let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for February 17th through February 21st. We keep our weekly trading game plan notes in publicly accessible Google documents. You can find a direct link to this Google document in the description box below. Our weekly trading game plan notes documents contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trading strategies, our trade ideas for the trading week. We keep all of our weekly trading game plan notes, Google documents, in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weekly trading game plan notes. And you can also find a direct link to that Google Drive folder in the description box below. Welcome, Gerald Fitz, Fairchild. Thank you for joining us today. Hope you had a great trading week and are doing well. So firstly, we'll quickly see how the markets ended up on Friday, and then we'll do a breakdown of the major indices, the technology components. So if we look at the main page in FinBiz, see the Dow was slightly down 0.37%, NASDAQ slightly up 0.41%, S&P pretty flat, down only 0.01%, so pretty choppy oscillating day on Friday. Had a pretty even split between advancing and declining, 54% advancing, 42% declining. However, we had 82% new highs, only 18% new lows. We've now got 61%, 62% above their 50-day moving average, only 38% below. And we've also got 60% above their 200-day moving average, 40% below. So again, a pretty choppy, pretty flat day on Friday. I also see a split between the Mag 7, so Apple, Nvidia, Meta up, Amazon, Microsoft, Google down, Tesla flat. Lilly, another kind of add-on, was significantly down. So very split, got a mixture of red and green. We'll look at the sectors in a minute. Welcome, Katon, Sydney Osborne. Thank you for joining us. Hope you had a great trading week and are doing well. So some of the news, more Americans with government loans are falling behind on mortgages. So some more defaults on mortgages. Retail sales post biggest drop in nearly 2 years amid winter freeze. So we'll look at the retail sales data we got this week. Warren Buffett bought booze, pizza, and pool stocks, ditched Ultra Beauty, so pretty defensive. Fearless Wall Street traders refuse to panic on tariff war rages, so we'll talk about that. S&P closes little change, but Wall Street notches weekly gains. We look at the futures very quickly. Oil's down near that support level at 70. We'll see if that 70 holds and it bounces again. Natural gas, again, very volatile, but long-term upward trend. Gold peaked out, made new all-time highs, and then broke back down below that 2,900. So that 2,900 is now resistance level, 2,850 or so, probably good support. See, right now the Dow and S&P are pointing down, NASDAQ pointing slightly up, and the Russell slightly down as well. Bitcoin now again still below 100,000, so that 100,000 level will probably be a pretty strong resistance level. And we had seen bond yields pop up on, we'll see the hotter than expected CPI and PPI inflationary data that we got. They did pop up and then retraced again on Friday. So now we can see the 30-year back down below 4.7, 10-year back down below 4.5, 5-year down to 4.3. So again, for good for positive mortgages going forward, etc. So if we quickly look at a breakdown of the major indices as well, Again, just a quick reminder, you can access these screeners, links to these screeners on our notes documents, as well as in the screener sheets of our ETFs and Watchlist Google Sheets. Welcome to Crow. Thank you for joining us. Hope you had a great trading week and are doing well. So if we look at the major indices, see most of them pretty much at their previous high. So Dow has a double top, retraced slightly down from that. Still got some room above its 50-day. NASDAQ looks like it may have broken or tested the previous high back from December. So again, back to its all-time highs, out of that channel, got some support from its 50-day. So again, I expect some retracement back to that trend channel. S&P also testing its previous highs, making new all-time highs, and hugging that 50-day pretty tightly. So a lot of chop in the markets. But all along their all-time highs. Not so much with the Russell. Again, Russell's in a declining 50-day moving average, providing resistance. It's just chopping along that 50-day moving average. Got some more downside down to that lower trend line and the longer-term moving average. So again, weakest Russell, small caps, etc. You look at a breakdown of the technology components. Bangs, again, strong, Magnificent Seven, near their all-time highs again. It was interesting, had an exuberant run in the ARCs. It broke its previous high, made a new 52-week high, gapped up. Kind of interesting considering the money-losing nature of most of the ARC-K. So we'll talk about opportunities tomorrow with shorting ARC-K using the SARC ETF. So again, I think that was a little bit overdone, but it does have some room up to its upper trend lines, hugging its 50-day pretty well. So that provides pretty good support, but possibly a short-term trade against shorting ARC-K with SARC. Again, just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some entertainment purposes only. Again, semiconductors not really going anywhere. It's bouncing off that multiple bottom, hitting resistance to the 50-day. It's got a declining trend line. So again, just chopping between that multiple bottom and the 50-day, not really going anywhere. TQQQ just leveraged on the Qs, again, broke out of its channel. Nice gap up. It has some room to its previous December high. Broader technology, not quite as strong, but again, did break back up above its 50-day moving average near the upper trend line. So broad technology, not quite as strong. And again, a lot of chop, a lot of lateral trading there. So expect more of the same chop, lateral oscillations in broader technology. Again, biotechs, again, money losers are going to be the weakest. It did bounce off that lower trend line. Probably going to hit resistance on that 50-day moving average, the upper trend line. So again, very choppy, but you can play, the bounces lab U, rejections lab D, and biotech, but I don't expect it to go anywhere anytime soon also. Okay, if we look at a quick breakdown of the groups, the sectors, the industries, and FinBiz, see our sector rotations. So on Friday, the strongest sectors were technology, communication services, probably mostly Mag 7, financials rebounded, energy pretty neutral. Weakest were defensives, basic materials, healthcare, and consumer defensives. For the week, again, technology, communication services strong, basic materials positive, energy positive, real estate slightly positive. The weakest was healthcare. However, for the month so far, consumer defenses, basic materials, financials, real estate, so retracement in bond yields, lower interest rates, beneficial for some of these sectors. Again, so we saw a rotation out of those on Friday back into technology. Again, energy for the month, pretty negative, mostly oil dropping down near 70 again. Industries, gambling from the Super Bowl. Solar rebounded slightly, steel rebounded a little bit. Some REITs, mortgage REITs rebounded, lower mortgage rates. Most negative, oil, other REITs, other basic materials, copper, although copper had a pretty strong run. Gold and silver had a strong run, slightly negative for Friday. We'll look at uranium in a second. Coking coal, this is an opportunity that we've been watching with MET-C. So that being very negative, maybe we'll get an opportunity we'll talk about again tomorrow with MET-C, as coking coal is an input into steel production, and one of the tariffs we've been talking about is on steel. So I did want to quickly open uranium. Again, with the exception of LEU, that had positive earnings and ran up. Most of the others look like they're rotating back down. So some of the ones we like, DNN, CCJ, UEC, UROI, all cycling back down, UUUU. So we're watching those to see if they cycle back down, if we can get another swing play again in some of those uranium stocks. For the week, again, gambling, steel, some REITs, mortgage REITs, silver positive, gold slightly positive, solar negative, other REITs pretty negative, again, uranium pretty negative for the week, gold, steel, silver positive for the month, uranium negative for the month, aluminum negative for the month, to get another target of tariffs, solar pretty negative, and coal and oil. So I hope that all helps. Okay, let me grab a quick drink and we'll go over the economic data from last week, look at the economic data upcoming for the following week. Okay, just a quick reminder, as the important economic data comes out, important economic news, I try to capture that in real time and post it in the Surf the Markets channel in our Discord. Our Discord's free to join. You can find a free invite in the notes as well as in the description box below. So again, as the important economic data comes out, grab a screenshot from investing.com, the raw data as well, paste that in the Surf the Markets channel in our Discord. Also, other important economic news. Our Discord also includes a whole bunch of channels where you can discuss all things trading different asset classes, using different trading styles, different trading platforms. So again, you can chat 24/7 in our Discord. We'd love to have you join and actively participate in our Discord. Okay, not a whole lot Monday, Tuesday, Wednesday. See mortgage rates drop down below 7, so that's positive for the housing sector. Then we got the very important inflationary data, the core CPI data, CPI headline CPI. And it was significantly harder than expected, showing even core inflation still above their 2% target. Actually went up to 3.3. Month on month was 0.4. Year on year now is back in the threes, so 3.0. So it shows a rebound in inflation, very negative for Fed rate cuts. We saw a very short-term spike in the VIX, retrace very quickly. So they shrugged this off, even though this will probably defer Fed rate cuts even further. So again, inflation's rebounding hot back in the threes. Real earnings negative. And Thursday, we got PPI data as well. So producer inflation was also hotter than expected. So month on month, 0.4. Year on year went up as well, 3.5 versus 3.2 expected. Core is pretty much in line month on month, but year on year, again, up. So this shows both producer and consumer inflation is going back up, which again, very negative for getting any rate cuts anytime soon. But again, market pretty much shrugged this off, and we saw, the markets go up. Also got jobless claims data. Initial was less than expected, continuing also lower than expected. So job market remains resilient. So again, another reason for the Fed not to cut. There was even talk of them potentially raising. I personally don't think they'll raise. I think they're going to defer cuts probably until late this year. Friday, we also got retail sales data, which was very weak. So month on month for January, negative 0.9 versus negative 0.2 expected. Year on year was only 4.2. So again, poor retail sales for January. Core -4, expected to be positive. So again, consumer stopped spending in retail in January. Maybe they got their credit card bills from the holidays and with the high interest rates and decided to stop spending. So that's again negative for the economy. But we still got a resilient job market and inflation going up. So again, Fed shouldn't cut. They again talk that they might even raise. So next week, just a quick reminder, markets are closed on Monday for Washington's birthday or President's Day. So hope you enjoy your long 3-day weekend. We look at the rest of the economic data from last week. Some bond auctions, little weak. Still got Fed officials talking, although again, not creating a lot of volatility right now. I think the market, again, we've got all this bad inflationary data, got tariff concerns, etc., but the VIX is still very low. As we'll see, the fear is dissipated some. So the markets want to go up at this point. So they're shrugging off all the bad data at this point, in my humble opinion. Again, mortgage rates down a little below 7. Talked about CPI data. Had the Fed Chair Powell testimonies. Again, some people focus that might be a source of volatility, mostly, in my humble opinion, political grandstanding. So not a whole lot of impact on the markets from those Powell testimonies before the House and Senate. He did reaffirm that he's not going to talk about, what the administration says, what the politicians say, focus on their mandate. So that was positive, in my humble opinion. Gasoline inventories down significantly. Talked about jobless claims at PPI, natural gas storage down more than expected. So again, long-term trend in natural gas is up, we'll see. Import prices up, but not more than expected. Manufacturing production negative, expected to be positive. So again, slowing manufacturing. Baker Hughes rig count up slightly. So they're surprising. They're pumping more, even though oil prices going down. Total rig count up a little bit. Look at the data for next week. Again, markets closed on Monday for Washington's birthday holiday. Some manufacturing data, more Fed officials talking. We'll get housing data, mortgage, building permits, housing starts. So with slight retracement in bond yields and mortgage rates, we'll see if that boosts housing at all. We'll see if there's expressed concern about tariffs on Canada for lumber. We'll get weekly jobless claims data on Thursday. Some global manufacturing, more housing data. Probably the most important data for next week will be Friday Michigan sentiment. Last time it went up to 4.3 from 3.3, very negative. We got a negative reaction from the market out of the Michigan sentiment data. So if this continues to be high, it could be, again, a very negative reaction from the market on Friday. And we still got plenty of earnings, although most of the Mag 7, with the exception of NVIDIA, have reported. But you can look through the whole earnings calendar in investing.com, see how that might impact your trading. Sentiment moves with similar companies in the same industry sector, etc. We've seen a number of these, cosmetics very negative, etc. So again, it's worth keeping an eye on who's reporting. And most of the majors have already reported. So you can see if there's anything that would impact your trading or your current position. There's a risk to network, some networking, a little bit AI related. So Toll Brothers, some housing. So we'll hear about housing here. Any concerns about tariffs out of some of these companies, Lazy Boy, Furniture, etc. You can hear how we trade around earnings via the link to the video in the notes. And as we've seen, anyone who misses earnings or if they give poor guidance, getting punished severely. Beating earnings is, pretty much holds them up at this point. Quick reminder, the next Fed meeting is until March 18th and 19th. We'll get another dot plot, another SEP at that time. So we'll see if they defer their rate cuts even further through March. Welcome, Gabe Fabe. Thank you for joining us. Hope you're doing well. Okay, let me grab a quick drink and we'll look at the market screen in Webull very quickly. Just a quick reminder, if you're not already using Webull, you can still get 20 free fractional shares of stock by opening and funding your account with as little as $500. Each of these fractional shares worth $3,000 to $3,000. If you use our affiliate link in the description box below, you can get your free fractional shares of stock. Also take advantage of any other promotions they happen to have at the time and also help support our BeachBum trading community, which we greatly appreciate. I'm using the market screen in the online browser version of Webull. We can see the histogram from Friday's pretty balanced. So we saw the markets were just kind of flat, pretty choppy. So we had 3,200 advancers, 3,000 decliners. All the advance and decline is relatively small. Again, very balanced. Had a pretty steady outflow out of the NASDAQ, typical that we see on Friday. Pretty uptrending inflow in the NYSE, again, pretty typical for a Friday. See the fear gauge has moved up to neutral, so we're now at 45 neutral, whereas previously it had been fear, 28 fear previous week, 28 the previous month. So again, Market's pretty much shrugging off the bad inflationary data, fears of tariffs, etc. So we saw it kind of bottom on the 7th, bottom on the 14th of January, a little bit lower, and then just rebounded almost to the previous high in the end of January. So again, market just kind of shrugging off all of those concerns and moving higher. Again, quick reminder, you can also see the near-term earnings calendar in the calendar widget in Webull. Flip to next month, and then you can go day by day, see who's reporting earnings in the near future, see what their expectations are, etc. So again, a great place to see near-term earnings calendar in Webull. Also, the Treasury yield curve remains inverted between the 20s and 30s, also between the 6-month and the 1 year. So got some interesting bends in the yield curve, and you can watch the yield curve here in the market screen in Webull as well. So if we look at the best performing industries for the week, computers, semiconductors showing positive, although the index stock sell not moving a whole lot. Software has been doing well. Water utilities positive. Financials slightly positive. Telecom very positive. Drug kind of split. Oil and gas mostly positive. Freight positive, so transports. Software and IT services very positive. Hotels pretty split. See Papa John's we've talked about, been watching it popped up. So congratulations to anyone that caught that. Even beat DraftKings. Metals and mining positive. Transports again. Take a quick look at the ETFs, most popular ETFs. So up on the Qs, leverage Qs, down on the Dow, down on the mid caps, down on the S&P, mostly mid caps, and up on the NASDAQ. Long on Bitcoin, so up on Bitcoin. Short the Russell, short small caps. So industrials pretty strong, financials, utilities pretty negative, communications positive, energy positive, real estate negative, defensive very negative, cyclical positive, so a reversal but from last week from defensive to cyclical. Basic materials also negative, so a rotation back out of basic materials. Lithium is positive, however. Cut, which is a timber, positive. So oil shipping positive. We've got that in our ETFs. Google Sheet talked about that a couple weeks ago. Wheat had a run up. We'll see. So just a quick reminder, you can now also trade 24 hours a day, 5 days a week in Webull, and you can get more information about overnight trading in Webull via the link to the video in our notes. Also the discussion topic in our Discord. Also, you can trade futures in Webull. You can get more information on futures trading and their current promotions via the link to the topic discussion in our Discord. We quickly look at the futures also in FinViz. We see the Dow is pretty topped out, got probably resistance at that 4,500. It's kind of oscillating there. Similarly, S&P close to testing its previous highs, kind of chopping around between that 6,000, 6,150 or so level. NASDAQ futures haven't quite caught up to their previous January, or well, I guess that's late December high, but it had broken above its early January high, so trending up. So up on the NASDAQ, flat on the Dow, flat on the S&P, and pretty much down on the Russell. So again, small caps, money losers, probably going to continue to trend down, possibly test their previous lows. Nikkei kind of oscillating. Europe's been very strong upward trend in Euro stocks and DAX. There is still some potential upside. You can see the long and short ETFs for the Euro stocks in our ETFs Google sheet. We have a long for the DAX, but not a short. But some of these ETFs are shortable, so if you can short those when they peak out. But again, you'll see in the EURL ETF, there is still more upside potential in the Euro stocks. And we saw oil testing that 70 level. We'll see if that holds and it bounces back up a little bit. It does break down and retest that previous low. Again, we'd be looking at going long again with USOI. I'll look at the term structure in the VIX also real quickly. And we saw the very short-term spikes on that bad CPI data, but they didn't hold at all, retraced very quickly. VIX is actually, I think, below 15 now. So volatility very cheap. I find that very surprising, again, with all the tariff issues and the deferment of these, so future tariff issues that we'll talk about at the VIX, and we'll see the term structure as well. So again, you can see the VIX term structure and the reference links of our homepage and the links section of our homepage, beachbumtrading.com, bum without the U. So we look at the VIX term structure. You see the current VIX is very low. It's actually, I think, again, below 15 right now. And we see going forward, it's still relatively low, 16, 17, 18, only gets to 19 in September. So again, not a lot of fear in the market despite all the tariff issues, the global trade war, various wars in the Middle East, the Ukraine, etc. So, but not a lot of volatility, not a lot of fear. You can see previous day and currently, not a whole lot of difference. And again, it's relatively below the general term structure. So again, as Katon, Easy Mike, The Crow, etc., have been pointing out, volatility is still cheap. So if we do get a negative reaction to any of the tariffs or Ukraine war, etc., could get a short-term spike in the VIX. But again, those spikes have not been holding for very long. So if you're nimble and can catch that decline using SVXY, make some money on those quick retracements. Again, natural gas trending back up after the rollover, filling that gap. So strong upward trend. So expected to test 4 in the near future. Again, pretty volatile. Gold's been very strong, up over 2950 or so, and are retracing back down just below 2900. We'll see if that regains and it trends back up to 3000. This interesting silver spike slightly above 34 and retrace very quickly back down below 33. If you happen to catch that retracement with the ZSL leveraged short ETF on silver, make some good money there. See if we get another spike back up in silver. AGQ is the long, ZSL is the short. See copper peaked out at about 480 and retraced. Platinum and palladium swing back up. Looks like platinum peaked out and rolled over. Corn trending up. Oats rebounded. Rice rebounded. had a slight retracement in wheat and then a strong surge back up, just above 600. Probably get a slight correction, but again, strong upward trend in wheat. So congratulations again to our BeachBum traders who caught this swing in wheat with the WEAT ETF that we've been pointing out for quite a while. Orange juice way down, not sure why that is because there were a number of issues with production here in Florida. Lumber rebounded. Looks like coffee finally maybe peaked out. Sugar bounced. Again, the bonds pretty volatile. So they did rebound after that hot CPI, PPI data. So trending back up, probably test the previous high. And then again, longer term trend should be up. Dollar weakened dramatically, so I'm not really sure why dollar weakened so much, except possibly some strengthening in the euro. So right now the dollar's trending down. Yen just bounced, so probably test its previous highs. We'll talk about this dip, this severe dip in the Canadian dollar related to tariffs and how you can make money trading these violent moves in the foreign currencies based on tariff news. So yeah, and if you're a Forex trader, again, we'll talk about how the tariff news, possibly you can make money trading these foreign currencies based on the on again, off again tariffs. Okay, I'm going to open up our ETFs Google Sheet and we'll be jumping back and forth to that as we talk about how to make money trading tariffs. I want to get that open so we can jump back and forth and see where our opportunities are to make money trading tariffs in our ETFs Google Sheet. Just a quick reminder, as we come up with trade ideas or trading strategies, then we can be it a long or a short trade idea, and we can jump over to our ETFs Google Sheet, find the ETFs to trade different commodities, indices, countries, foreign currencies, etc., single stocks, all in our ETFs Google Sheet. And you can do likewise, get 24/7 access to our ETFs Google Sheet by joining our Patreon. You'll see in our notes, I've got a number of additions to our ETFs Google Sheet. If we have time today, I'll come back to those and we'll look at some of those individual additions to our ETFs Google Sheet. Otherwise, I'll come back to them tomorrow or next week. But again, you can refer to our ETFs Google Sheet and see the additions that we've made this week. So we've got a number of single stocks, Coinbase, mentioned by Katon, Easy Mike, thank you for that. Gold, well, the single stocks, we've got an addition from on Meta from the Crow, on Netflix, also mentioned by the Crow. So we've got longs and shorts on Meta and on Netflix now. Got a new Mag 7 one, a new gold one. Also single stock on Robinhood, a long mentioned by the Crow. So thank you, the Crow, for all mentioning all those. So again, we've added all those to our ETFs Google Sheet, and if we have time, we'll look at them individually as we have time. So let me grab a quick drink and then we'll talk about our theme for this week on how to make money trading tariffs. So again, our theme for this week is how to make money trading tariffs, and we've been talking about this for quite a long time, even pre-election. So I want to add some points, and then we'll also look at a previous discussion from last week that I didn't have time to go over, and also some additional information, some additional articles that we've got about the tariffs. We've got new news on tariffs, on again, off again tariffs. So I wanted to first mention some other potential impacts of tariffs that, in my humble opinion, we might see, like Forex swings in foreign currencies. So we saw that quick dip in the CAD, the Canadian dollar, when Trump announced tariffs on Canada. And we saw a very quick rebound when they got delayed for a month. So I think there are plenty of opportunities with the Forex market, foreign currencies. So when we hear these news on again, off again, tariffs on various countries and their potential impact, we do have ETFs in our ETFs Google sheet, in the ETF database sheet, where you can also trade foreign currencies if you're not a Forex trader. Also, I hypothesize and have heard cases where people are stocking up on products that are going to be tariffed or potentially going to be tariffed ahead of these tariffs. For example, I heard Jim Cramer, whose wife's got a tequila company. They filled a warehouse up with tequila because they knew Trump was going to apply tariffs to Mexico. I highly suspect there are many others that are doing likewise. So products that potentially or in the future are going to get tariffed, people may be stocking up on them ahead of those tariffs. So that's a positive for companies selling those products before the tariffs. But if people are stocking up and then they're going to, use that supply after the tariffs are applied, could be negative for their sales after tariffs. So we might see again a spike in sales and possibly earnings of some of these companies pre-tariff, but then a drop post-tariff. So be aware of that. Also, the potential for increased domestic demand, but decreased foreign demand. One of the things I heard out of our Canadian friends was a push to buy local, buy Canadian. So don't buy Pepsi or Coke, buy RC Cola in Canada. I think you're going to hear more of that. So these companies or countries involved in these trade wars may push their populace to buy local, buy domestic, and not foreign products. And again, that can benefit local companies and be bad for multinationals, your Cokes, Pepsis, etc. Again, positive for domestic suppliers. So if they're tariffing products coming and being imported, it might be positive for the suppliers, the domestic suppliers of those products. So things, could be agricultural, etc., but also things like auto parts, etc., because a lot of auto parts are in Canada or Mexico. So you might find opportunities for domestic suppliers with those products that are going to be tariffed. Also, some companies may move their production locally. I think it was one of the beverage companies moved their production to Turkey because of tariffs. So you might see some of these companies, I guess BMW moved production into the US in the past to avoid tariffs. So you might hear some of these multinationals open production in a local company to, again, avert the tariffs from happening to import. I'm also wondering if we're going to see a swing. We're seeing a swing back up in 3D printing, slow, but I wonder if this will cause more increase in use of 3D printing. 3D printing has a number of benefits. Not only can you produce locally parts and things like that, but also you use less material. So you could get a double benefit from using 3D printing locally to produce parts, etc., that otherwise you would have to import. So I'm wondering if we're going to see a resurgent swing back up in 3D printing. Tariffs, again, are potentially inflationary. It kind of depends who's going to eat those tariff costs, be it the producer, or the retail sales person, if they're going to pass that on to the consumer. In my humble opinion, I think the manufacturers are probably going to pass on any tariff costs to the retailer, and then the retailer will have to decide if they want to raise prices to the consumer or if that's going to hurt their demand. Although they could and probably will blame that on the tariffs. Any further price increases, they'll probably blame on the Trump tariffs. So this could again be inflationary, and we saw inflation already going up, so that could defer any further Fed rate cuts, etc. Also, a potential decrease in margins. So whoever eats this tariff cost could decrease their margins, bad for their earnings per share, etc. So again, companies that are impacted by these tariffs may see lower margins, lower EPS, and probably lower stock price in the future. So I want to also go over our previous discussion on tariffs that I didn't have time to go over last week, which you can find in the notes, the link to the notes from last week. So we'll quickly go over those as well. Again, here are my notes from last week on how to make money trading tariffs. So again, we've been talking about this for quite a while, so you can also access previous discussions in the link to the previous videos in both of these notes. We had these on again, off again tariffs with Canada and Mexico. So as part of that, I asked ChatGPT what the largest imports to the US from Canada and the largest imports from Mexico. So just very quickly to look at those, because again, it was just deferred for 30 days. So these are the most imminent tariffs to come. So from Canada, we could see oil, auto parts, vehicles, machinery and equipment, wood and lumber, again, machinery and equipment, plastic and chemicals, fertilizer, aluminum and steel, plus they had an additional tariff on steel and aluminum. Agricultural products, wheat, beef, corn, so maybe that's part of the pop up in the price in wheat. We look at Mexico. Manufactured goods, automotive, electronic, and agricultural. So again, we've got auto parts and vehicles. So again, your auto manufacturers going to be hit with tariffs on both ends. So very negative for the auto industry. They're going to have to pass along that cost or eat that cost. Computers and electronics, again, machinery, oil, medical equipment, pharmaceuticals, and agriculture, avocados, tomatoes, etc., tequila, electronics, furniture. So we talked about Lazy Boys reporting. We'll hear if they have an impact from tariffs, plastics, textiles, apparel. And again, you can do similarly. We've talked about China previously. Again, you can go to ChatGPT and ask for the major imports for any of the countries, and we may talk about those further. We already saw some retaliatory tariffs from China, and I expect as we slap more tariffs on China, they were actually preempted our tariffs and slapped tariffs on the US. And retaliation, again, I expect more of that. And the question is the EU next. Right? Trump's made some, negative comments about the tariffs and the VAT taxes in the EU. So is the trade war now going to move to the EU? Are we going to see these on again, off again tariffs with the EU. So be aware of companies based in the EU, significant business in the EU, etc. And we've been talking again about tariffs for quite a while, so you can refer back to our notes for pre-election where we were talking about potential tariffs and countries that might benefit or be hurt by Trump's trade war. So we've got a number of videos on the various ETFs, etc., for these various countries. So you can access these videos via the links in the notes. Some of these are bonus videos. They haven't been released yet, but again, you can access these videos all via the links in our notes. And these are the ones that we're going to talk about further, and then we'll jump over and we can see these ETFs in our ETFs Google Sheet. So some of the countries under consideration: Brazil, India. Modi just visited. India had gotten a little pop and then retraced. Some of the ETFs, again, we'll look at our India ETFs. We talked about Indonesia, Japan, Malaysia, South Korea also got a bump up recently. They're getting past their other turmoil in South Korea. Talked about Vietnam. I haven't done a video on those. We'll look at those ETFs. Also, we've got a broad Asia ETF, AIA, that Ketan shared with us. Another one I added this week is Central and Eastern Europe could benefit both from tariffs, also if the Ukraine-Russia war ends, that may benefit Central and Eastern Europe. We'll also see in a second, they don't seem to have a lot of high tariffs in that area, so that again might see some production move to that area, and that would benefit Central and Eastern Europe, but it may need the end of the Ukraine war. Again, you'll see the CEE popped up recently on the efforts to end the Ukraine war. And this was shared by Born to Be Free. So thank you again to Born to Be Free, who pointed out this CEE ETF and the potential pop on potential end in the Ukraine war. Also, with all these trade wars and tariffs, etc., is there a risk of a global recession? There was talk that, Canada's economy could go into recession if those tariffs were applied. There are probably some other countries that might slip into recession, but in general, seeing less, international trade, less global trade, could negatively impact, global shipping. So global shippers, actually, there's been a number of those that have been popping up in the double bottom, multiple bottom screens I do. And the broad ETF on dry bulk shipping is BDRY. We scalped that profitably recently, but I'm kind of staying away from that long term. You might get a short term burst if people are stocking up short term, but then again, if we get less global shipping, global recession, probably negative for your global shippers. So I also want to go over this news article. Donald Trump signs his plan for reciprocal tariffs, but with a delay. And we can also see there's a nice graph in here about countries that have the highest tariffs. So let me grab a drink and we'll go over that very quickly. So again, you can refer to access this article via the link in our notes. But again, this was, I don't remember what date, Thursday or Friday, the 13th, so it was Thursday. Trump announced reciprocal tariffs, so whatever they apply, including, he was talking about including VAT taxes or GSTs in consideration, considering that a tariff. But they're not going to go into effect until April. In fact, they're just kind of doing a study. So a lot of volatility, in my humble opinion, probably a point for negotiation. So we're going to hear a lot of this on again, off again, reciprocal tariff talk. So again, I think that would create more volatility, but the market hasn't really reacted a whole lot. So you see they're going to complete a study by April, and then they're going to decide what tariffs to apply. And again, I'm sure it could be on again, off again. And Modi come in, didn't seem like they made a lot of progress because India popped and then dropped back down a bit. Again, we got 25% on steel and aluminum already. Also, again, these Canada and Mexico tariffs just got delayed for a month, so those could be on again um, in a month. So we could see again a drop in Canada and Mexico in a month. So India to Brazil, South Korea have higher average tariffs. So again, this article has a really nice chart with who has the highest tariffs. So this is kind of interesting. I think Kenya would be at the top. We see India has high tariffs, Argentina, Brazil, South Korea, South Africa we talked about recently. So with all the talk of China, they're actually kind of in the middle. Also, you see there really aren't any EU countries up in there. UK is pretty low. Japan's quite low. So the EU countries actually have relatively low tariffs, but I guess if Trump considers VAT tax, GST tax part of tariffs, that might bump them up in the list. Canada's tariffs are very low. So considering trading these various countries, probably want to consider that potential for reciprocal tariffs. So but with some delay, so we've got some time. So Brazil did pop up, but again, if they get reciprocal tariffs, that could be very negative for Brazil. Same way South Korea, India. So again, people focusing on China, but some of these other countries, they move production to those countries. The tariffs are actually pretty high there as well. Like I said, India, some we don't see. Vietnam's only 4%. You don't see Indonesia, or, well, there's Indonesia 5%. I didn't see Malaysia. So that might be a good place for people to move production. Again, get lower tariffs, possibly Malaysia, Indonesia, Vietnam are lower. Japan, again, pretty low. Australia, pretty good. So we do have ETFs for Australia as well. So again, you can use all this information to, trade this tariff news, these on again, off again tariffs to make money trading tariffs, be it various countries. And again, I'll just point out where you can find the ETFs for various countries, also various commodities. We talked about wood and lumber. So there's the wood and cut ETFs for wood and lumber. Also, there's some of the other products we talked about. So you can find a variety of ETFs to long or short some countries in either our main sheet or in our research sheet. So for example, you can see pretty quickly the Brazil. So some cases we have a long and a short on Brazil. You see Brazil did pop up a little bit recently, popped up nicely on Friday, but again, we saw reciprocal tariffs could be negative for Brazil. So if those get announced, then BZQ to short, BRZU to long, or EWZ to long. And we've got China long and short, etc. And you can find a number of these other countries. So there's Australia, we've got Canada in the research tab. Here's CEE, again, Central and Eastern Europe. See that popped up recently on potential peace talks with Ukraine. So I think Ketan Easy Mike was asked about India recently. So again, you can find all the ETFs we have on India. We have primary ones, INDL, INDQ for internet and e-commerce. And we've got others, INDA, INDY, EPI. So you can see those all dropped on Friday. So again, you can pick the ETF with the composition, the risk reward profile, etc. that you'd like by using our ETF Google sheet. Just search for the country and either the ETFs or the research sheet. So again, here's Indonesia. We have a long for Indonesia, don't have a short, but again, if this ETF is shortable, you could check that out with their Finviz profile. And if you're able to short the ETFs in your account, that could be an opportunity again if they announce reciprocal tariffs on some of these countries. Again, Japan, Malaysia. So there's Malaysia, EWM. South Korea, we've talked about, got quite a few in different. There's South Africa, long, South Korea. Koru is a little leveraged. So again, I'd highly recommend in terms of making money trading tariffs. Think about which countries may benefit or get hurt as these tariff news come out, and jump over to our ETFs Google sheet. You can identify the ETF for trading that country or that commodity, etc., to take advantage of that news on the tariffs. Again, I expect very volatile, a lot of on again, off again. Again, we'll get delays in these tariffs. Some, Canada, Mexico deferred for a month. The reciprocal tariffs can be delayed till post-April. And then I think, again, it'll be a point of negotiation. So again, I expect a lot of volatility. So using these various ETFs, I think you can take advantages, long on steel. We've got some for aluminum, etc. So all the different commodities, countries, also Forex. You can find the Forex ETFs in the ETF database sheet. So if you're looking, longer Canadian dollar, FXC with an ETF if you don't trade Forex directly. So again, you can find all of these in our ETF Google sheet. So if you do have any questions regarding a specific ETF, or you have some additions to our ETF Google sheet to trade various countries, commodities, etc., please put those in the comments to our video or in our Discord. Tag us in the Discord. We're at BeachBum Trading, all lowercase, no other characters, symbols, numbers, etc. Anyone else is an imposter, please ignore and report them. Again, if you had any questions or any tickers you want us to look at tomorrow, potentially come back to the additions to our ETF Google sheet either tomorrow or the following weeks as we have time. But you can access those now in our ETFs Google sheet, so you can see descriptions in the notes. And again, you can find these all by doing a find in the research sheet of our ETFs Google sheet. So again, if I missed your question or your request for researching a ticker, etc., please put those in the comments to our video or in our Discord. You can also see a variety of videos we've been talking about how to make money trading in February, how to make money trading in the winter, etc. So we'd also love your feedback on what we can do to improve our weekly trading game plans, any of our other videos, our tools, our Google Sheets, etc. We really need to hear from you, what you would like to hear more of, less of, etc. What can we do to add more value for all of our BeachBum traders? So again, we really need your feedback. We also need your help. We hope that you'll smash the like button on this video. Help us try to get the YouTube algorithm to show us some love someday and share our videos with more traders around the world. We really need your personal help with sharing our videos, etc. Please repost them on your social media sites, share them with your fellow traders, invite your fellow traders to join us in the live chat or our live streams, join us in the discussions in our Discord, etc. We'd greatly appreciate it, and it would benefit all of our BeachBum traders. So thank you again to everyone that joined us in the chat today. Anyway, everyone that's watching after the fact, we hope you'll come back tomorrow for part 2 of our weekly trading game plan for February 17th through February 21st. We're in part 2 of our weekly trading game plan. We'll take all of this market analysis, our trading strategies, trade ideas, and we'll select our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. Also talk about how we can use dividend payers and several income option strategies to generate income while we wait for our swing trading stocks to set up. So we hope to see you all back 10 a.m. on Sundays for part 2 of our weekly trading game plan. And otherwise, have a great rest of your day. Thank you again.